Maurice and welcome to Things to Invest, talk about investing, finance, fresh developments. For today's video, items only. The investment on top of today will be Ethereum ticker ETH. First, want to say happy Wednesday, everybody. Hope every great week so far. With respect to Ethereum, some recordings of 10:06 a.m. on the Eastern Time, currently at $2,280, down about 0.40%. It seems like we're just kind of percolating, trending on a sideways fashion right now, anticipating the FOMC meeting or the status of the outcome from the Fed's decision that we should be hearing later today around 2 p.m. based on the schedule that we see on the Fed's website. With respect to with the media outreach, is it going to be a press release? Is it going to be a transcript that's going to be distributed? Or is it going to be some sort of like media correspondence between reporters and the Fed's representative that's going to be inter-exchanging comments or questions and answers, if you may? Right, we don't know that, but we need to understand the confirmatory signal from the Fed on obviously the main topic, right? The inflationary pressure, the plan for tapering or quantitative tightening going forward, right? Because that's going to be critical as to how we're going to be shifting going forward with the U.S. economy outlook going forward, right? Based on the U.S. equity market, as I was taking a look at the futures, obviously, yesterday was a relatively red day across the whole market and on the index as well, because there are a lot of correlations to the Chinese stocks because of the, media affectation around the meeting that we had recently between the U.S. officials and the Chinese officials on discussing the relationship going forward, right? And the media companies have used the term to describe the relationship, quote, stalemate, right? Obviously, it's a negative undertone. Provide negative sentiments to investors' point of view, and subsequently influence a sell-off across the market, right? For NEO, I remember yesterday we were down 1 point to 10.10%, which was a relatively seismic one, right? So it seems like today we're rebounding, and I know that some media affectation companies are depicting that, it might be a rebound because of more of an optimism towards the FOMC meeting. I actually think differently. I think it was just a rebound. People just buying the dip from yesterday. It's a logical play to do, right? And I don't think it has anything direct towards the FOMC meeting later today, right? It has some correlations, but I don't think it's the main driver for it, if that makes any sense, right? So I'm going to go through a technical analysis depending on what's going to be happening later today. If it's going to be a negative decision, how it's going to be trending. If it's going to be a positive decision, how is it going to be trending going forward. We're in the business of risk mitigations. So stay tuned, stick around, let's make some money. So moving on to the technical analysis for Ethereum ticker ETH, I'm recording of 10:16 a.m. on Eastern Time, currently trending like the $2,287, down about 0.08% so far. It seems like the momentum that we're currently experiencing right now is pretty much just on a sideways fashion. We're not really trending up, we're not really trending down. We're just basically waiting on a sideline right now, right? Waiting for the decision that's going to come out later today from the Feds, right? And I think if you look at the schedule for what time it's going to come out today, based on the schedule you see in this box right here, it says at 1 p.m. CP commercial paper, 2 p.m. on an Eastern Time FOMC meeting, the 2-day meeting from 27, which was yesterday, to today, and the press conference going to happen today, right? So it seems like the press conference, I think based on historical experience so far, we've always had maybe a live stream or some sort of like teleconference, or it's going to be broadcasted on a media company, I think on CNBC channel or Fox News channel or some sort of like financial channel, right? I think you could probably find the link online as well. So we just need to do a bit of digging. But ultimately, we need to get confirmatory status on the inflationary pressure, right, with respect to what is the timing for that, right? Are we going to be postponing this, which would be a good thing, right? If we push out the 6 to 9 months depictions that Jerome talked about, there'll obviously be a positive news, right? But if we are restricting or making it earlier than expected from 6 to 9 months to 3 to 6 months, or they say anything about like inflationary pressures worsening, or with respect to the purchasing of assets, they need to cool down and stop like circulating the monetary supply anymore, that could subsequently drive obviously equity stock to go down because of that lack of monetary sustainability that we've been doing to keep these corporations to stay up without going belly flop, right? And also we'll also have the anti-correlation effect to the US dollars to rise because when you cut off the circulations for printing money, you have less money in circulations. Obviously, the demand for the US dollar will appreciate. That's also going to create more value to US dollars at the same time, right? And when US dollar appreciates, equity market goes down, crypto market will also go down as well because people want to just hold their cash, right? When cash is going up, people just tend to just like keep their money in the bank instead of like investing, right? So that's just a matter of fact, right? And also because of the fear of inflation that scares people away, that people typically liquidate or keep their money to their heart instead of just like investing and letting that volatile wave to hit them emotionally, if you may, right? So depending on how we're going to be trending later today, if we go positive, right, what are the frames of reference that would go down to or go up to respectively, right? So if it's positive, we are currently at the level of in between. We're not really at a substantive level that we're consolidating at right now. I would say maybe we are kind of hovering around like the 2,250 or 2,300, but we're in the between, right? So we're not really in the love. We're just levitating at the moment, right? A more substantive level, if we go up today and we have some positive pressure, and I think the equity market is kind of depicting that right now at the moment, despite the sell-off of yesterday. So kind of you want to cancel that out. I don't think this is really anything has to do with the FOMC meeting. I think this is just a rebound based on the technical analysis and just people were buying the dip basically, right? After they hear less, negative news on obviously the tension that we have with China and the U.S., right? So anyways, with respect to how we risk mitigate going forward, if we have a positive news today from the Feds, we'll leap up to the next level to obviously break through the 2,300. It will obviously go up all the way to 2,450, which is the level of next substantiveness, right? There isn't a level of 2,350 like the ones we have below, right? If you break through the 2,300, we go all the way to 2,450, right? And if the positive pressure is even more, we will go all the way up to 2,500 or 2,600 actually to be the next level. But I think we'll actually test somewhere around like the 2,550 first, and then leap up from there, right? Depending on how positive is the outlook going forward, right? But if it's negative, which I think that should be the case, based on just historical trends, the last three FOMC meetings has always been, negative. That drives sell-off across the whole market. So I think the reversal that we see on the equity side of the house right now is pretty much a temporary momentum that we're experiencing right now. So liquidating some of your equity holdings right now, if you bought the dip yesterday, that's a quick gain for you, right? Because I do think it's going to be the other way around, right? I hope I'm incorrect. I hope that the Fed is gonna prove us wrong. But based on how it's trending so far, I think that's a logical play, right? Inflation needs to happen for us to recuperate the economy, for us to recover fully, and obviously normalize our U.S. dollar to not further depreciate it, right? So if we break down $2,088 level, we'll go down to obviously to 2,150, which is a comfort level that I've talked about before, right? And I think we do have a high propensity to go down to $2,050 because of the fact that RSI is pretty much overbought. But not really crazy overbought like the days we were on the 26th, which was literally just Monday. We are slowly crossing down right now. We just recently formed that cross section on the MACD perspective, which makes sense. That's why we were able to pump up and away. When you cross, it's always a golden cross that indicates a bullish signal, right? So right now it seems like we are reversing. It's logical for us to cool down, and I think the next level leap down will be anywhere somewhere around like the $2,050, which would be, I would give that a 60% likelihood that we'll actually get there in the near term, especially on the fact that Friday and Saturday is weekend. We have that safe haven affectation, right? Ultimately, we need to be counting obviously the news that's going to be coming out on how that's going to be influencing people's feelings. Again, right, most people invest based on feelings, and for us, we think in more clear perspective, applying the logical methodology that we've talked about before will allow you to dollar cost average wisely and build that position up going forward. Right, so just to recap on the numbers and technical analysis, again, right, based on historical trends, right, the last 3 FOMC meetings has always been negative, right? So I think right now we're just waiting on the sideline, and I think we have a high likelihood of going down to the 2,150. And again, that's a comfort level. If we go down, that will be the 27th time we test that level, right? So that's the level that I would ideally want a dollar cost average, but I think we should be leaping down a little bit further down to the $2,050 just based on how the chart is set up right now. It just makes sense for us to cool down based on the 4 consecutive buy days we've had so far, right? Do we see 1950? If we break through the 2050, we will definitely go there. But again, the 1950 or the 1963 specifically is not really a substantive level, right? So leaping down all the way to 1900 can be possible depending on the verbiage that we hear and the investment sentiments around the economical outlook going forward, right? So something to be mindful of, right? In respect to like long-term wise, $9,800 in the next 12 months, 4.6 times your money from here, we buy it at $2,150. Alright, so this is for their respect my technical analysis on Ethereum ticket ETH. Hopefully this is helpful into giving you that strategy, that mindset, that framework specifically on how you're going to be maneuvering through the cycles, the volatility that you should be expecting going forward, right? But feel free to ask me if you have any questions. I'm always here for you to support you and obviously give you the right guidance, hopefully, right? But yeah, appreciate you. Stay tuned for the next come up. Take care. Bye.